Does income from your 401k, your IRAs, annuities, or pension affect how much money you're going to get from Social Security? Well, we're going to talk about that very thing today in our Tuesday tip, so stay locked in. My name is Carson Graves, Certified Financial Planner and President and CEO of the Retirement Education Center, and I want to welcome you once again to our Tuesday tip, where we're going to be talking about if distributions from your 401k or IRAs or other retirement resources can affect your Social Security benefits. Well, I can tell you that if you're getting the answer to this question from someone who's not an expert in this subject matter, it can lead you to being very, very confused and frustrated. So that's what we're going to cover today. So let's go ahead and jump into our lesson. So let's go ahead and talk about the talk, okay? So you have you and your friend. You're talking to your friend about wanting to retire early, maybe at the age of 62, and you're going to support yourself by starting your pension, or maybe you're going to pull money from your 401k or other retirement resources. And of course, you're going to start your Social Security benefits to help close the gap that you're going to need. Now, your friend is talking with you, and of course, she heard from her friend that that's possibly a bad idea for you, because when her friend took her Social Security benefits early, they actually took all of her payments until she got to her full retirement age. So unfortunately, you decide to rely on your friend's knowledge on the matter and decide that you're going to continue to work another 5 more years until you reach your full retirement age. So let's go ahead and talk about the facts of the matter, because facts still do matter, I hope. When we're talking about the facts of this particular situation, now there is a limit to how much you can earn. So I highlight the word earn here, and still receive your full Social Security benefits before your full retirement age. In 2023, that limit is $21,240, okay? Now, if you actually earn more than $21,240 in 2023, the Social Security Administration will withhold $1 for every $2 that you earn above that annual limit. For example, let's just say that you are under the full retirement age all year, and you're entitled to an $800 benefit from Social Security, which is $9,600 for the year. Now, if you happen to work and you earn $31,240, just to keep it simple, which is $10,000 over the earnings limit of $21,240, what they are going to do is withhold $1 for every $2 that you earn over that limit. And of course, simple math is going to tell us that's going to reduce your benefits by $5,000. So instead of you actually receiving $9,600 for the year, they're going to subtract out $5,000 because you went over the earnings limit, and you're going to receive $4,600. Now, you may be wondering what's going to happen with this $5,000. Do I lose that money? Absolutely not. When you get to your full retirement age, they're going to pay that money back to you over time. So what's really important when it comes down to this question? Well, it's what we've been talking about. What is considered earned income? Well, it's going to be income from your W-2 wages or tips. It's going to be also net income from self-employment. What is not considered earned income is going to be income from your pension payments, annuities, interest or dividends from your savings or investments, or of course distributions from your 401k or IRAs. So your friend would have been telling you absolutely the wrong information. You could retire and you could take those distributions and it would not affect your Social Security benefits one iota. So what do you have to consider? Because you still do have to consider one thing. You have to consider taxes. Well, if you file your taxes as a single filer, and your income lands you between $25,000 and $34,000, you can pay up to 50% of taxes on your Social Security benefits. If you're over $34,000 and you're a single filer, you can pay up to 85% of taxes on your benefits. Now, if you're a married couple, that income threshold is between $32,000 and $44,000 a year. And if your income lands between this threshold as a married couple, you will pay up to 50% of taxes on your Social Security benefits. And if your income goes over $44,000, you will pay up to 85% of taxes on those benefits. Now, as an important side note, that many people do not understand. You do not pay taxes on your full amount of your Social Security benefits, only 50% of it. So let's go ahead and take this example so I can really make that point clear. Let's just say that you're receiving $20,000 a year in Social Security benefits. And let's say you're also working part-time where you're going to make $15,000 of earned income. And to help supplement your income, you're going to pull out $6,000 from your IRA. Your total income in this particular moment is $41,000. For tax purposes, the IRS is only going to use 50% of your Social Security benefits to include in your taxation of those benefits. So that's only going to be $10,000. They're going to include all of your earned income of $15,000, and they're going to include all of the IRA distribution of $6,000. But from this standpoint, your provisional income or your taxable base for income purposes will be $31,000, not $41,000. Now, if you are a single filer, as we mentioned, that's going to be over that $25,000 threshold, so you will owe some taxes on your Social Security benefits. But if you're a married couple and you fall into this same particular scenario, you won't owe any taxes on your Social Security benefits. Again, thank you for tuning in to our Tuesday tip. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today. And if you found this information to be beneficial, all that we ask is that you subscribe to our channel, like this video, and share it with others.